Hello and welcome to Business Incorporated. I am Bisi Adebayo. Coming up on today's program, energy giant BP swings back to profit on improving oil demand. Ghana misses out on a rally of African bonds as investors fret ahead of elections in December. Plus, South Africa's cities to switch to solar as power monopoly ends. Well, let's begin the show right away with intraday market numbers here in Africa, which were mostly positive, except the GSE, which shaved off 0.65%. The bullish sentiments were sustained in Nigeria as the NSE gained the most by 0.43%, while the EGX30 in Egypt rose 0.32%. Kenya began the week by 1% negative on Monday. Well, it's a similar picture in the Gulf region where most markets were in the green territory at intraday. In the UAE, the market surged at intraday with the Abu Dhabi index up 1.25%, while Dubai's main index advanced 1.14%. Elsewhere in the region, the Qatari index was marginally higher by 0.09%. Only Saudi Arabia's index declined at intraday, and that was down by 0.44%. Well, let's turn now to Europe, where stocks pulled back this morning amid a choppy start to trading as investors continue to monitor the rapid spread of coronavirus across the continent and digested a fresh round of major corporate earnings. Well, let's talk now to Conrad Bosin for more on this. Good afternoon, Conrad. Trading on Europe's equity trading floors continues to be shaky after significant losses yesterday. But one particular asset, and that's the Bitcoin, is back in the limelight as the largest ever dollar value Bitcoin transaction happened yesterday. How are financial people in Frankfurt discussing this?
Well, good afternoon, BC. Yes, 1.1 billion US dollars, or the equivalent of 1.1 billion US dollars, were exchanged via Bitcoin from one wallet to the other in one single transaction since the beginning of this year. This has to do with the fact, of course, that since the beginning of this year, the value of Bitcoin has increased so much. It has more than doubled since the beginning of January. Now, the discussion here in Frankfurt, as you know, one of the world's traditional classical financial centers, is very agitated. Who was it who ordered this transaction? Who received the money? We will probably never find out, because Bitcoin, it's its trademark to provide anonymity to the people using it. It's not being supervised by the traditional masters of the monetary system, the central banks. Another point of discussion, of course, is why the demand for Bitcoin has increased so much this year. Corona is likely to play a role, as so many countries have taken on such enormous amounts of new debt, which sort of weakens the reputation of traditional currencies like the euro and the US dollars. Also, the election in the United States is likely to have played a role here. The uncertainty about the outcome of the election, the uncertainty about whether or not Donald Trump will be accepting a potential defeat, that has caused some investors to be cautious about the US dollar.
Now, let's talk about Ant Financial now. That is the name of a payments affiliate of China's online giant Alibaba. The IPO of Ant Financial is expected to happen next week, and it's going to be the largest initial public offering ever. But now the order books in Hong Kong are reported to be closed earlier. What's behind this?
Well, a demand among institutional investors in Hong Kong for the shares of Ant Financial is so high that the order book is going to be closed one day earlier than originally planned. So, institutional investors in Hong Kong have until tomorrow, Wednesday, to apply for some of those shares of Ant Financial. Retail investors have until until Friday. So, it's very likely that we are going to see this IPO happening in Hong Kong and Shanghai before the US election next week. Ant Financial, the large financial services provider, wants to become a biggie. The company plans to use the money from the IPO for internationalization. Whether or not this also means takeovers, acquisitions, maybe by banks, also here in Europe, remains to be seen. Of course, the financial sector is a very regulated one, so governments and supervisors of the financial sector will likely scrutinize very closely any advance from such a big player coming from communist China. The numbers of this IPO are awesome. Ant Financial is poised to raise the equivalent of $34.5 billion with the IPO, which would valuate Ant Financial at more than $300 billion.
All right, let's talk politics for a moment, Conrad. Former Nigerian Finance Minister Ngozi Okonjo-Iweala has reportedly picked up crucial backing from the EU in her bid to become the first African head of the World Trade Organization. Tell us, how significant is her candidacy for people where you are?
Quite significant. It's the first time that the Europeans are backing an African candidate, which of course acknowledges the fact that what's going on in Africa has become more and more important for us here in Western Europe in recent years. In terms of trading, in terms of how our continents and how the countries are doing trade with each other. Also in terms of debt, the debt problems of many African nations have become worse in this year of recession. Also, of course, an important topic is migration within Africa, but also from Africa to Europe. So Ms. Okonjo-Iweala's candidacy and her backing by Europe is a very important topic. Her job as a WTO chief will be a tough one. As you know, the Americans have been criticizing the WTO for quite a while, but also here in Europe, many people, pundits, politicians demand that changes happen at the organization. For example, China is still considered a developing nation in the framework of the WTO, which gives China's economy lots of privileges, many privileges that it doesn't deserve anymore. So things have to change at the WTO. The rules have to become more fair and more just. And that will be a tough task, maybe, for the former finance minister of Nigeria.
We'll wait to see how everything plays out in the end. Thank you, Conrad. Do enjoy the rest of your day. Moving on now, energy giant BP has reported $100 million in profit for the third quarter of 2020, beating analyst expectations. But this is compared to a loss of $6.7 billion in the second quarter and $2.3 billion profit for the third quarter of 2019. Now, the company says it benefited from stronger oil prices and the absence of significant exploration write-offs. But let's get more details from Juliana Olayinka, who joins us from our studio in London. Good afternoon, Juliana. Tell us more about BP's latest earnings report and how the markets are reacting to the news at Intraday.
Well, BP shareholders have pushed up their shares at Intraday. I believe BP shares are up by about 1.8%. And you've really laid out all the figures there. This is a great story for BP. They've just about managed to go into profits in Q3. I think you said 100 million. I've got $86 million on my records. But as you said, compared to this time last year, they were banking profits of $2.2 billion. But considering they've had over a $6 billion loss in Q2. This is a great success story for them. Bernard Looney actually said that the company is performing while transforming. That's a poem there for you. But there are still cost-cutting measures on the table. 10,000 jobs are expected to go across the world for BP as oil demand is, of course, slowing down. I think Bernard Looney a couple of months ago actually said that the peak for oil demand is actually over. So we are going to be seeing more job cuts and restructuring for them. And of course, they have a really ambitious figure of transforming from a dirty oil company into a clean, green, a fighting machine. And so they want to hit net zero emissions by 2050. Are they going to do that? Bernard Looney, the chief exec, thinks they will. But let's have a look at the numbers at Intraday. BP's pretty positive profit numbers wasn't enough to push up the FTSE All Share. It's still down 0.21%. The FTSE 100 is also down by 0.23%. And the FTSE 250, the domestic market, also down by 0.60%. In currencies, the pound down on the US dollar by 0.02%, up on the euro by 0.01%, and down on the Japanese yen by 0.19% at intraday. Bissy.
Now, Juliana, let's discuss this latest forecast published today by accounting firm PricewaterhouseCoopers, saying that the UK hotel industry could take 4 years to return to 2019 levels of business, even if an effective vaccine helps the sector to recover from the deep financial hit caused by COVID-19. I'm sure this is all tied to the continuous decline in foreign tourist numbers, isn't it?
Well, absolutely, yes. That's the short answer. It's really hit every sector, but particularly hotel sector. PwC, this report that they conduct has actually been described as the bleakest sector report that the hotel industry has seen for half a century. So that's how bad it is. At the moment, London hotels, I believe, are currently trading at a 28% occupancy. This time last year, it was about 86%. And it's not just people that are staying for 2 weeks. They've really been missing out on business travel. A lot of business travellers, they would come for a couple of nights, stay in their hotels, huge events. I'm sure many of us would have been to one hotel or another for some sort of event, which the hotel sector really relies upon. They're not seeing that. And PwC, this forecast looks way into the future. And although they do expect numbers to start creeping back up in 2021, because of Zoom and the likes of all those other conference meeting applications that people are using, will employers be keen to pay for the £1,000 business class ticket to send somebody to London when they can meet somebody else via Zoom? That's a huge question, and that's what PwC have been looking at. Really, they have really struggled. And of course, as we've discussed on this programme over the past couple of months, the tourism and travel industry has had the lion's share of the brunt of COVID-19, and it is set to continue for years to come.
Now, let's wrap up our conversation with this question, and that's talking about the UK communications regulator ruling that mobile phone companies are to be banned from selling devices that are locked into specific networks. What's the reason for this new rule?
It's an interesting story, actually. Ofcom, the communications regulator, said they're putting customers first. They want customers to be able to choose exactly what phone they want to use with what network. This was initially here in the UK about 10 or 15 years ago. You bought a phone, you were stuck with the SIM card of the provider that you purchased it from. But they are all suddenly changing. But there are some bad eggs named in the Ofcom report, including BT, EE, Tesco Mobile and Vodafone. So by December next year, it will be illegal in this country to sell a phone and ask the customer to be locked into your provider. Providers going forward will have to give customers the choice of choosing whichever network they want.
All right, thank you, Juliana. We'll see you again much later. And stocks in Asia Pacific were mixed on Tuesday. Hong Kong's Hang Seng Index closed 0.53% lower at 24,787.19. Shares of Alibaba in Hong Kong gained 0.67% after the Chinese technology giant's affiliate Ant Group set the price for its shares on Monday. Meanwhile, Hong Kong's listed shares of HSBC soared 4.81% after Europe's largest bank by assets on Tuesday reported a higher than expected third-quarter pre-tax profit. Elsewhere, stocks in Australia led losses among the region's major markets, with the S&P ASX 200 down 1.7%. Mainland China's stocks recovered from earlier declines, with the Shanghai Composite gaining around 0.1%, while the Shenzhen Component gained 0.594%. But in Japan, the Nikkei 225 ended its trading day fractionally lower at 23,485.8. When we return in just a moment, we'll turn our attention to the domestic commodities market. Stay with us. Welcome back. Cement is a major building material used by construction companies. The construction sector contracted by 31.77% in the second quarter of 2020. However, the price of cement has remained flat at 2,600 naira per bag. Well, that's our focus today on our commodities market update, and the research analyst at the financial derivatives company, Tobiloba Ogunpolu, joins us now for an analysis of this. Good afternoon, Tobiloba. Thank you for joining us on the program. Now, the price of cement is yet to decline despite the sharp contraction that we saw in the construction sector in the second quarter. Why is this?
So, this industry is the building block of the construction industry, and the growth rate in the cement industry and the construction industry is almost identical. So that's why when there's increase in construction activities, we see that there's also the increase in demand for cement and also increase in the price of cement. But in the second quarter of 2020, we realized that the construction industry contracted by about 31% in Q2, and the price still remained at 2,600 naira. Since last year, it was 2,600 naira till now. It is currently 2,600 naira. So when we look at inflation dynamics, inflation this time last year, was about 11.21%, and currently inflation is about 13.7%. So the fact that the price has not moved in the same direction as inflation shows that there's an anomaly here. So I can only say that this is as a result of, say, manufacturers bearing the brunt of the cost. So you can imagine during the pandemic, if assuming the price of some ingredient that they use in making cement increases, you don't expect companies to increase the price, because definitely the price was the demand was muted at that point. So definitely an increase in price during that period would have led to flat demand. So definitely we saw that a lot of manufacturers absorbed the price of the commodity, and that's why the price has remained at 2,600 naira.
Now, of course, you've talked about the manufacturers. Now, when you look at the performance of most of the companies in Nigeria, it declined due to the COVID-19 pandemic. However, when you look at a company like Lafarge, there's a second largest manufacturer of cement with 17.38% of market share. It sustained a strong growth in the third quarter with a revenue up about 31.4%. What's responsible for this resilience, and what are we to look out for in Q4?
Yes, so the revenue of the company jumped by about 31% and to about 59 billion naira in Q3. That was due to, one, they realized that there was a sharp increase in volume growth by about 10%. That's year on year. So last year and this year, the price increased, the volume growth increased by about 10%. And that was due to the strong recovery post-pandemic. Q2 was the pandemic period, and post-pandemic, as activities start to increase, we saw that there was increased demand, and most especially in the private sector. So there was increased demand for cement, and that led to their strong growth. Secondly, they saw a decline in their gross borrowing. So during the period, they saw about 18% also year on year in a decline in their gross borrowings, and that led to about 2.8% increase in their PAT. So, and lastly, they also saw that net operating cash flow was stronger during the period. So, all this led to their very good performance in their financials. And we also expect this company to increase in Q4, and that's due to the fact that Q4 is the dry season. The use of cement and construction activities is usually much in dry season, and Q4 and also Q1 next year is also dry season. So we expect construction activities to increase during that period, and we expect that to lead to a good performance for them too.
Now, the federal government is hoping to embark on a major fiscal stimulus, which will involve major civil works and construction. What impact will the stimulus have on demand and price of cement, which is currently at 2,600 naira per bag in Q4?
Yes, so we saw that the construction industry contracted by about 31%, like we said before, in Q1, and construction activities are picking up, and which is evident in Lafarge's volume growth by about 10%. And we know that Nigeria, the federal government, are planning to embark on civil works construction activities, and this will definitely pick up in the dry season. Like I said before, that is when activities usually increase. So the dry season, Q4, Q1, we'll see that activities in the construction industry will start to improve. And if we see that, we'll see that there will be an increase in demand for cement, and also an increase in price for the commodity. So in Q1, Q4 2020, that's in the next 2 months, and also Q1 2021, we'll expect increase in construction activities.
All right, many thanks. Tobiloba Ogunpolu, research analyst at the FBC. Thank you for sharing some of your time with us. Ghana is missing out on a rally of African bonds as investors fret about an expansion in spending and borrowing ahead of elections in December. According to the AFMI Bloomberg Africa Bond Index, which tracks the performance of local currency bonds of key economies, yields on the $146 million 3-year bond issued in April have climbed to 19.2% currently, after falling to a low of 18.7% on August the 19th. 5-year notes Ghana sold in June have climbed to 20.5% from 19.8%, while similar maturity papers in Nigeria eased to 3.1% from 6.4% over the period. Now, Ghana, which is the largest economy in West Africa after Nigeria, raised its budget deficit target for 2020 to 11.4% of GDP in its mid-year budget review in July, from an initial forecast of 4.7%, citing the impact of the coronavirus pandemic. And South Africa's biggest cities are getting set to source their own power after the Energy Ministry's approval for them to wean themselves off the state utility. Johannesburg and Cape Town, which have a combined population of about 10 million people, plan to diversify away from the electricity produced mainly from coal by Eskom Holdings to more sustainable sources such as solar and power generated from landfill gas. In addition to improving security of supply, the move will also allow cities to boost their fight against climate change by using power that doesn't result in the emission of greenhouse gases. And still, it will slash revenue for Eskom, which is struggling to service the $30 billion debt deal. And that's our program today. Many thanks for watching. I am BC Adebayo.